Hi guys, welcome to the channel. On today's video, I'll be talking about the three entry models that have given me over $5,000 in the past 2 to 3 years I've been trading the market. So as you all know, or if you have seen me for the first time, or those that are in my WhatsApp channel that don't really know the strategy I use in trading, I use SMC for trading, and I have three back-tested models that I'm going to show you today, and they can actually make you profitable in the market. So let's dive into it. So here we have model 1, model 2, model 3. They look similar, but they're a bit different in some ways. So I'm going to break down each model to make it simple. I'm the kind of guy that I like simplicity. I don't like those much grammar, calling too much grammar. Someone is trying to learn trading and you're trying to make it look hard. You get trading isn't easy and it's not also hard. It's just strategy. Strategy is the only difference. So the difference between a profitable trader and an unprofitable trader is not actually even strategy, it's just knowledge. So let's dive in and I'll explain everything that you need to know about these three models. So first of all, I said I'm a smart money trader or SMC trader. Many of you might know what SMC mean, or you are just hearing for the first time. Smart money means smart money concept. That is, SMC means smart money concept. You think like the big institutions and try to execute trades like them. When you trade against them, you get burnt. Like that is, you hit your stop loss. So first we have model 1, we have our TP, we have BOS, we have another BOS, then we have a sweep in market structure, sweep in liquidity, order block, and then boom. I'm going to explain what BOS means. So BOS actually means break of structure. We had 2 BOS on this model, and then where I placed my TP is my recent high. So first of all, in every strategy you use, we always lay emphasis on the trend is your friend. The trend is your friend. Don't trade against the trend. What the trend means is actually market structure. Either the market is on a uptrend or a downtrend. When you trade against the market without the proper knowledge, you can get burnt in the market. So now I've explained what BS mean and I've explained this. So market structure. Here we have an uptrend, which is higher highs, higher lows, higher highs, higher lows, higher highs. Market is an uptrend, Abi. Then we had a sweep here. We call this inducement. This is inducement. We call this inducement. Then a sweep in market structure. A very simple model. You look for 2 break of structure in the market, is look for an inducement, and then your TP should be placed at the recent high, and then this double X here is called sweep of liquidity, or say yes, sweep of liquidity. Yes, so liquidity is very important in every model. As you can see, we have the model 1 has the sweep liquidity, the model 2, they are all the same. Liquidity is very important in the market, so it's one of the factors or the key factors you need to look out for when trying to use this model. We have 2 break of structures, inducement, your order block, sweep of liquidity, and then your TP should be at your recent high. The market will simply come down and it's your TP. It's very simple. It's very simple. I always say, if I'm teaching someone, I always say the market needs to make someone cry and I know before you now make money. The person needs to cry, and that's what it means. A lot of people have been taught like the SMC strategy, and they will tell them always place your trade or always take your trade at the last candle, last red candle, or last blue candle, or last green candle that caused the break of structure. And that is why here is your liquidity, because many traders will be placing their entry here and their stop loss below the low, because this was maybe probably a red candle here that caused a break of structure. So that's where you now use those traders as liquidity with the knowledge you've gained. This place will now be an inducement or liquidity area where many traders will be induced or liquidated before getting you. So those traders need to be liquidated before you have an actual entry. That's what makes the trade an A1 setup. Once you have a particular zone where many people, or if you have 100 traders in the market, over 90 something will be thinking of taking that trade at the initial place, knowing that place will, for you, that place should be your liquidity zone, because the market will always try to liquidate them and then give you a change of direction or a change of character. That's that for model 1. Model 2, here almost the same thing. We had a sweep of liquidity, but now we have only one BOS. That's one break of structure. We have only one break of structure. Then now you now ask me, there's no inducement here. Why we had inducement here? It should be your inducement here. This should be your inducement here. This is the liquidity, swept liquidity and came back. Boom. This is model 2. Model 2 is just simple. One break of structure, sweep of liquidity, and then we have our OB here in the market to come test it and move to your way. It's so fast, Abi. Very easy, very simple. Then model 3, which the BTC trade, for those in my WhatsApp channel, for those in my free WhatsApp channel, I shared a BTC trade there, and we actually use the model 3. On the next video, I will actually be explaining this model 3 and how we used it to take the BTC, and I think the trade is still running. Yeah, so model 2 is done. Back to model 3. Same thing, sweep of liquidity. The market is in an uptrend, which is this break of structure, and then you see your inducements here. This is where many traders will be induced. You can call them liquidity, and the market will now sweep that liquidity, react to your OB, and then go. These are the 3 models I use. That have been making me profitable for so far 2 to 3 years. One of my guys asked me, say, the only trading they give you all this money. Well, I've been consistent with these setups, and they've actually made me a good amount of money. So you can take this video and then try to backtest them on your own. Don't use these ones and say, it's simple, make I go do them as Tony take talk. No, you try to backtest it on your own and see how you can actually master this strategy. Few persons have thought actually caught the first strategy or the first model than the other 2, because they got that this first one had those two break of structure. Anywhere they see 2 break of structure, they know that that's their setup. He's behind the camera. So 2 break of structure, and then in this went and boom, we made the money. That's the only one they've captured so far. But the rest, so now another thing why I made them 3 is because the market works in phases. There's a way the market moves. There will be a particular time or a particular session in the market where you just be seeing only model 1. Maybe throughout the whole week, this is the only model you'll be seeing. And then another period of time, you not even see these 2 at all. All you now be seeing is the 3rd one. So you just really need to master it. Mastering it is training your eyes to be able to see them in the chart, because there are always opportunities in the chart. It's just for you to know how to look for them and then make the best out of it. So down here, I listed key points I was supposed to explain. I explained smart money concept. I explained market structure, where I say higher highs, higher lows. If the market is making higher highs and higher lows, you are in an uptrend. Then the downtrend is when the market is making a lower low, lower high, lower low, lower high. And let me illustrate that. I think lower low, lower high, lower low, lower high, lower low, lower high. The market is in a downtrend. So that's for downtrends, but I'm actually treating the uptrends now. So then we say liquidity. Liquidity, we have 2 kinds of liquidity, and liquidity videos will be different from this. I'm going to link it into the video. I'm going to treat everything about liquidity, so you understand the reason why the market hits your stop loss and then go the other way. Yes, liquidity is the main reason why the market will hit your stop loss and then reverse to your direction. I'm going to teach you guys everything about liquidity on a separate video, so keep your eyes peeled on my channel. Then we have church, in other words, change of character. I normally say when the market is in an uptrend and then it changes direction. The first break of structure is actually what I call the change of character. It means the market has changed character. Imagine the market going down, down, down. As we have seen here, I think the market was coming down, and then all of a sudden you saw this up. This was the first one. This was the first one. This was supposed to be a change of character here because the market was falling, and then we had a sweep of liquidity, and this was supposed to be the change of character here. So I always say my first break of structure is my change of character. It's very simple because the market was all through downtrend, and then it changed direction and started making higher highs, higher lows. That first higher high you made was supposed to be your change of character. Same thing with the downtrend. As the market is falling, and all of a sudden, okay, the market is pumping, all of a sudden you see it broke below a low. The first BOS it did for the downtrend is what you mark as your change of character. I think I need to make a separate video on these key points or key factors you need to know about SMC on a separate video. Then smart money models. Okay, I've treated smart money models. So if this video has been helpful to you, or if you've learned one or two, please subscribe. That's the only way you can pay me for the information I'm giving to you. Subscribe, turn on the notification bell, and then use the link in the description to join my WhatsApp channel. Very important, as you share signals like today. You can see the BTC trade we took today over 200%. Also hyped because let me not leak what I'm going to say in the next video. See you on the next one. Peace.